Hey, this is Matt from InvestiQuant. Today is Wednesday, July 20, 2022. Yesterday, the markets were strong. We took off to the upside early on and continued all day long, closing up near the highs of the session and making a new 20-day high close. And that's what we're going to be looking at this morning, is what has happened historically following a strong close at a 20-day high. So let me get this all set up. I've got all four instruments selected. Setups based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we're pulling back in the overnight session, so I'm going to go to the opening filters library, and in gap direction, I'm going to click on gap down. The next thing I'm going to do is go to the price pattern library, and I'm going to grab two different pieces of information from this section. I'm going to grab the pieces of information about closing near the highs and closing at a 20-day high close. So I'm going to use active today because that's going to tell you what is true for today's session based on what happened yesterday. And I'm going to go to this right here, close in top 25% of daily range. And then if I go down a little bit lower, day after 20-day high close. That's added both of those to this test. The next thing I'm going to do is go to the indicators library, put us in a similar market environment. And for this one, I'm going to put us below a 200-day simple moving average. I don't need to use the 10 like I normally would because I've got a 20-day high close in there. So now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping down in the prior day close at a 20-day high and in the top 25% of its intraday range, but below a 200-day simple moving average. Historically, we've got 30 samples in the S&P dating back to 2003. We've got 22 in the NASDAQ, 24 in the Dow, 45 in the Russell. Win rates on these are mixed. ES, which is the S&P 500 futures, 50%, NASDAQ 64%, Dow 54%, Russell 36%. So we're kind of all over the place here. If we look at the average moves, average win a little bit larger than the average loss in the S&P. For the NASDAQ, it's the average loss that is larger. For the Dow, it's the average loss that is larger. And for the Russell, it's the average loss that is larger. So 3 out of 4 have larger average losses. S&P is the only one that does not. The win rates are mixed. I thought this was interesting because in more bullish market environments, this is often a stronger pattern to the upside. But in this more bearish environment, it is not showing the same edge that you can see in a bull market. So I thought I would share this one today. And if you're around this afternoon and want to learn about auto trading, head over to the link below this video. We're going to be talking about auto trading with machine learning this afternoon at 4:30 p.m. Eastern Time. We would love for you guys to join us if you are interested. We can teach you all about how we do it and how you can join in if you are interested. So that is at the link below. We hope to see you there this afternoon.